Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, August 7th, 2017. Well, folks, taking a look at the spiders today, a super light volume Monday, but that's actually how it's been all summer long. People are extending their weekends into Monday. Really, there's usually not economic news Monday morning nor earnings Monday morning, at least not big ones. So there's really not a lot to be a catalyst for bigger volume. Now, as you can see, it is already almost 2 p.m. Eastern time, and we've only done 15 million. We are on pace right now for the lightest volume day of the year. Now, a couple things of interest here on the S&P that I want to point out. Number one, we are stuck in a channel here. So it's an inside bar channel from the drop 2 Thursdays ago. So not last Thursday, but the Thursday prior. We had that sharp reversal down on the spiders here. It was actually led by the tech sector. The tech sector had a bigger drop, but you can see it clearly here as well. Since then, we've been in a very slow grind up pattern here. And when I say slow, I mean look at today's action. Today we are in a 40, make that 39-cent range, 39-cent range on the SPY. That's basically just under a 4-point S&P range for the day. Now, having said that, we are seeing the Dow Jones Industrial Average up about 18 points. It's on pace for its ninth record close. So again, it closes green today. That's 9 straight record closing days. That's pretty amazing, actually, if you think about it. All right, now a couple other things to note here. The big thing on the spiders that I'm going to be watching is this pivot top right here. So again, this was where we dropped off a cliff, and this is all inside bar action. So what you want to follow very closely is this high. Because right now, I know it sounds crazy, right? I mean, it sounds ludicrous. It even sounds ludicrous and crazy to me because this market is a one-way ticket to the upside. But right now, believe it or not, that this is technically a bearish inside bar pattern. All right, and again, the key is when you have a sharp drop like this and then you slowly go sideways, as long as you don't take that high pivot out, this is known as an in spirit of or bear flag pattern. And technically speaking, we haven't taken out that high yet up here at around 248. So it still is. Now, could it fail in a split second? Sure. You get an end-of-day buy program, and it could fail in a second. I'm just telling you guys, based on the chart books, the technical analysis books, what this would be considered. Okay? So understand that. Now, if we drop, I think it's important to recognize that from the current level of 247.65, where we currently are right now, even to get back to last Thursday's low, is less than a $2 move. Okay, it's about a $1.80 move. So I mean, $1.80 on the spiders. I mean, that's nothing. That's like a small panic in the market of minor proportions. So even though we've gone up now for so many days in a row on the S&P, we're just a kind of a neutral to positive every single day. Just be aware that it doesn't take much for us to go down and retest this level. This will be the big support. This, for a day trading purposes, will be support level for day trades as well. For just a quick bounce, obviously, not a swing trade. For me, the next big level will be this pivot right here, which is at 244.75. Then you have a gap window at 243.25 and a major gap fill right down here around 242 and a quarter. All right, so those are just some big levels. You can use them for day trading purposes. As swing trades, I would not be looking to buy just such a shallow pullback on the S&P or the spiders. And remember, the spiders is the S&P. The reason I say that is because, even in past months, we've seen a bigger drop than that on the spiders, and we are, in all fairness, overbought in this market. Even though it doesn't seem like it's going to ever go down, it is still technically overbought. Okay? All right, so for me, and some of you may say, well, where do you like the buy for a swing trade? Honestly, we'd probably have to drop, for me to feel comfortable picking up the spiders for a swing trade bounce, we probably would have to drop into the mid 230s, maybe the low 230s. I mean, so that would be a big drop at that point, over 5% or about 5% in this market. Okay, so that's what we have going on there. A couple things I want to talk about today, folks. Number one, the only thing that's popping up on my radar, Chinese stocks are starting, the microcaps are starting to pick up steam. JRJC, China Financial Online or Finance Online, you can see up about 18% today. Even CLNT, former runner, perked up a little bit today, although it's come back in. The reason why I point this out is because we want to be on the cutting edge. If the small caps are going to run in the Chinese area, we want to be on the cutting edge of them. Another fun one is REN, RENN, which is flat to negative. I can go to the daily chart. You can see the pattern there. It's actually consolidating not too badly, but look at this chart here. I mean, this is a pretty amazing chart how it's down so much just off the lows. What I like about this is that you have the necktie, you have a little golden cross occurring here that the 20 is going to cross over the 50 MA, bullish consolidation on RENN. And again, these are all small stocks, so they carry a lot of risk. So I just want to point that out. But again, just keep that in mind. And basically, you could look over any past runners in the Chinese area and start to get intrigued by them based on what we're seeing in the charts in some of these names. Now, as long as this market doesn't roll over, eventually these Chinese names are going to run. The big boys have already run, right? I mean, Alibaba speaks for itself here. I mean, this has been on a one-way course. Baidu has had an amazing run over the last month, month and a half. And even some of the smaller ones like Sohu, SOHU, this is a Chinese play. Sina, SINA, which reports earnings later this week, having a great day today as well. So the mid and large caps are all running beautifully. Now it looks like the money flow may be starting to find the small stocks, the small Chinese stocks. So again, that would be my recommendation, is to start scoping out some of those. And again, there's a lot of them out there that are still at their multi-year lows, and they could go very, very quickly. And again, I mean, how's Moby doing? MOBI. Actually, I don't even have that coming up as a symbol anymore. Let's see what are some other ones. Let's see here. I can't think of them off the top of my head, but how's Seed doing? SEED is another one. Yeah, I mean, look at that chart, folks. I mean, look at that chart. Pretty much back to the lows there. Grow, GRO. That doesn't seem to be trading under that symbol anymore. I'm just going back to things in the history of me trading for years and years that I remember. But yeah, Seed actually looks pretty good. Keep an eye on that one. That could be an interesting one. And there's a bunch of other ones too. So, anyways, on that note, folks, I'm going to bid you farewell. But again, I would say if you're looking to get long, start looking for areas that haven't run yet. And again, start looking at the Chinese small caps. That's where I'm going to be looking. All right, I'll talk to you soon, guys. Take care.